Hey, everybody. Welcome to Market Mavericks. The boys are back, and it's not even quite summer. Well, maybe it is a little bit, but here we are ready to discuss the markets and what a day we have. I mean, talk about a great day for Market Mavericks today, joined by Mike McGlone and Scott Melker. How are you gentlemen doing, and where the hell do we start?
Tariffs, right?
Yeah, I guess tariffs and markets, stock market down, NASDAQ's down about 5%, S&P down about 4.5%. Even gold, last I checked, was down a little bit. Bitcoin holding up a little bit better than expected. You were just mentioning that, Scott, right? Talk to us about that.
Yeah, it's showing, as Mike would say, divergent strength. And I like it because you would think that with the way that things have been trading over the past few months, that a 5% day in the Qs would be a 10% day for Bitcoin, right? And I think that that would put us sub 80,000 easily. And if you take a look at the Bitcoin chart, I mean, it's basically been, you take a look at these candles right here, 1, 2, 3, 4, 5, 6. We've opened and closed at 82,400 for 6 days. Regardless of all of this and regardless of the ups and downs around it, Bitcoin's effectively trading at the same price all week in the face of all of this volatility. That to me shows that it's still a bit of a nascent asset and probably has something else going on. Maybe it's a institutional bid that we haven't heard about. Maybe GameStop's buying their $1.8 billion worth here. Maybe Saylor's got another $2 billion in the pipe. But I've been very, very impressed at how well it's held up, even given the ugly volatility yesterday. But that said, the altcoin market is just dying on the vine. And so, it's very hard to say that crypto is doing well. I think Bitcoin, though, is hanging in there for now.
So do you think that part of Bitcoin's strength could actually be global investors maybe rushing for a safe haven, like, with the uncertainty over these tariffs and what could happen? Because I seem to remember when Russia invaded, there was talk that the oligarchs were kind of shifting money in. I mean, maybe some of that kind of thing going on a little bit.
I think there's a chance. It's just really hard to determine right now. It's not like the volume is so crazy high, certainly not on exchanges. I don't know what's happening on the OTC desk, but if I was seeing, twice the volume that we've been seeing on the sell-off, I might think that there was something like that happening. I think right now, sellers have just been a bit exhausted in Bitcoin. It's the middle of the week. They can still sell their other things, right? Usually you see Bitcoin get the really disproportionate sell-offs on the weekend when nobody else can sell anything else. And, I think there's actually been a renewed interest in gold here, although it's down a few percent today. I mean, gold hitting 3,200 is not something to ignore.
Incredible. I want to show this chart and get Mike's response. All right, so NASDAQ is down. It looks like it's actually rallied decent, a little bit off of its lows here, but, that's the weekly, actually. Excuse me. Here's the daily chart. So we are still down 5.2%. The reason why I bring this chart up is because you can't deny how this parallel channel, the COVID low, marked the low of the channel, the bull market high of 2021. Bear market low here was the low end of the channel. And then really, if we extrapolate that out, does it mean that the NASDAQ's going to 13,800, or where is the NASDAQ going, Mike? What are you seeing?
Yeah, it's going to get cheap. Typically, it takes one day to flip the narrative, and we have that today. You get one down day. We all know, I think every risk asset, every person on the planet knows you're supposed to be selling the stock market in the U.S. Now, this is a narrative I started really talking about a few weeks ago. You can see it happening. And today's the day just proved it. All right, sell rallies. Question, how far does it go? It's going to get cheap. And it's supposed to. The thing is, I don't know. It's what's happening that is the things I like to say is if I keep saying the same thing, it's eventually going to happen. These are things that have been so waiting for a catalyst. I mean, this U.S. stock market ended last year, at 2/3 of global market cap, the highest ever. Yet we only have 20% of GDP and 1/20th of the population, even less than that. And and how it has that spark. So maybe I can show some real quick charts, and I'll show you what I mean. I love using the crocodile jaw charts. And what I'm showing on the first chart is that's the 5-year note yield, the U.S. 5-year note yield. It's rolling over. It's a 200-day moving average. It's called the belly. The belly of the curve is treasury trader. The belly's rolling over, but from the highest level since 2007. At the same time, the VIX is bottoming, the 200-day moving average from the lowest, about the same. This disparity is the most significant since 2007. Now that was, for me, that was a really rough year because it was just like last year. I was really bearish markets, and I lost money, and I made that and much more back 2008. That to me is what it's happening. At the same time, you look at this is just the gold divided by S&P 500 ratio. It's just starting to tick higher. Now I'll show you another crocodile jaw chart. This is the 200-day moving average of the Bloomberg Galaxy Crypto Index. It's rolled over. I mean, just think of Ethereum. It's just getting started. Last time this happened was 2020. Look how far it went. At the same time, we have VIX going the opposite. It's just getting started. And do we have a worthy catalyst? So right here, I show S&P 500. It's just starting to roll over. I mean, they're such early days. And this is why I'll end here, and I want to tilt over a little bit. And I stick with the thing I've been saying for over a year, that to me, the next big trade is U.S. Treasury long bonds. And this is what I like to show in this chart. This is a chart of GLD divided by TLT. Now, it's the total returns, because TLT does still give you over 5% on an annual basis. It's the highest ever, that spread. Now, you go back 20 years, at the same time, we have volatility bottoming from the lowest level. This is a 200-day moving average of VIX. Take a minus T-bill rate, because what are the key things that pressures gold when the stock market's on a tear, volatility is declining, and interest rates are high? They're all flipping now, just getting started. That's why I think we have the makings of a tremendous trading year. But the trends you're seeing on the screen today with the stock market going down, probably just getting started. Expect pretty significant short covering rallies. And gold, yeah, still bullish, but it just got a little bit overdone, and it's probably going to find good support around $3,000. And I think it eventually gets to $4,000, but that might mean the S&P 500 getting to $4,000.
Where do you guys see yields going, right? So we've obviously, so let's be clear with everyone. And, we have tariffs imposed. So tariffs were worse than the market expected, right? If they were equal to the market expected, the stock market would be flat today. If it was less, the market would be up. Obviously, markets are getting crushed. This was worse than expected in terms of imposing tariffs. But yields are down, and I think, correct me if I'm wrong, but it's because the tariffs are expected to slow economic growth substantially. Therefore, rates are coming down. But I guess the question is, how low are rates going? Are we going back to COVID levels, or are we going to like 3% or 3? Like, what do you guys think? Scott, you're shaking your head. Talk to me about that. Oh, lost your audio.
I don't think we're going back to COVID levels here. I think that they've learned the lessons of ZERP, and it would take a hell of a recession or depression to get back down there. But I do think they continue to drop, maybe mid 3%. What I'm interested to see if mortgage rates actually follow for once, because we've had these strange sort of scenarios where mortgages haven't buzzed even when interest rates dropped, and it's been all over the place. So I think that would tell a bigger story about what's happening with real estate in the United States. I mean, I think this tariff thing is just a slow motion train wreck. Or a fast motion train wreck.
Speaking of which, let me ask you guys both a question. Are these tariffs that have been imposed will we look back, will society look back and say this was a huge mistake, or are we going to look back?
I'm not convinced they're really being imposed, and I'm not sure that the Trump administration knows either. And you can listen to Lutnick, and it's like he's talking out of both sides of his mouth. On the one hand, this is a negotiating tactic. We're reciprocating tariffs. Everybody's going to get scared. They're going to lower their tariffs. The tariffs are going to go away. Everybody wins. Free trade. On the other hand, tariffs are going to replace the IRS because they're so amazing and we're going to make so much money on them. And they're calling it the External Revenue Service when it's American companies that pay the tariffs, not China. You impose a tariff on China, it's an American company that pays a 25% tariff to the U.S. Customs. Maybe there's some secondary effects where China then negotiates lower prices, all these things. But it just seems like even within the administration or the people discussing it, that there's a fundamental misunderstanding. I mean, the chart of the tariffs looks, there's actually accusations that it was done on ChatGPT, but it looks like an intern just threw some numbers together and didn't understand, because all the research I've been able to do, these numbers are completely wrong in that chart that he held up. And they literally included places that are uninhabited, like the Heard and McDonald Islands off of Antarctica with 10% tariffs. That's in the second page of this chart that's not here. I mean, what person put those on a chart? They're not actual places. It's like they went to like the movie Moana and put the underground place where all the demons live as a place to tariff. Like, did they tariff Ethereum? I don't know, but it's crazy. Like, there's literally places on a chart that don't exist that we don't have tariffs with.
One of the arguments someone was making to me is that, oh, well, Vietnam imposes tariffs on stuff that we send over there, and so we're doing it back to them. And I'm like, yeah, but what the heck does Vietnam actually buy from us? Like, they're not buying.
We export dollars. And
that's really goods. So it's not like anything's getting, almost nothing's getting tariffed.
They may have a plan, but the reality is, like, you put tariffs on people that are supplying things that you can make yourself. That makes a lot of sense, right? Because then you have competition. Your companies should use American made. You don't tariff a bunch of goods that you can't make yourself that you need.
Or
And
that they make so cheap that it keeps prices low for us.
And by the way,
then,
that only exists in Vietnam because of tariffs we did to China before, so they just moved to
right.
Vietnam and Cambodia.
So
And by the way, so Scott, Mike, before you jump in, I think that's an important point here, is because a lot of U.S. companies thought they were doing the administration in the last Trump administration a solid by saying, "Hey, you don't really want us to do business in or produce everything in China. We'll move to Vietnam. This is something that you're asking us to do." And now it's like, boom, to 50% tariff anyways. It's like, okay,
So let's look at the facts of what it means for markets. This is a major headwind for the whole world, who's grown increasingly dependent on net exporting to the US and not having reciprocal imports. And their systems are completely set up for that. Now, I want to show, first of all, as far as bond yields, I'm showing where I think bond yields are going. China is 1.71%. So you don't have to show the screen more. And I saw this happen in Japan. I started trading JGBs in the 90s, and everybody was bearish. They thought the yields were going to go up, and they didn't, and the rest of the world follows. This is where we're going with yields. So back to tariffs. The key thing I want to point out, a quote I learned in the trading pits in Chicago, I have to mention Chicago, the heart of the Rust Belt in the 90s, is everybody in the world wants free trade as long as they can run net exports with the U.S. The Trump administration just put the kibosh on that. And what he did yesterday was completely spelled out in Robert Lighthizer books. People are criticizing a lot, but every single piece of detail, and there was the bottom line, is we're raising tariffs the rest of the world to give ourselves a normal playing field. What's a good example of Canada? 1/10 is the size of the U.S. economy, biggest border, non-protected border on the planet. It's impossible for them not to run a surplus of exporting goods to the U.S. because to make that level, because they can't offer anywhere near the same kind of demand pull market we have, because people like us consume, is to have U.S. charge 10% tariff on everything they send. They should charge us nothing. Now that's what's happening. That's the fact of what's happening. So like it or not, these are things that resonates for me from decades ago. And remember, I've seen the Ds. I've seen the people die, and I've seen the divorces. I've seen the Rust Belt just get hammered. Now, yes, it's not just because of that, but this is, at least they're making an attempt. That's my point, is that there's a natural self-correcting mechanism in this country. It's going to show how awesome this is. If it doesn't work, within 2 years, certainly by 4 years, it's going to be all over and we'll flip back the other way. If it does work, it's going to completely reverse the world order, shift it back into our favor. And as Robert Lighthizer pointed out, is we will stop exporting wealth to the rest of the world. And here's the facts of GDP. When you're a net importer, you have run trade surpluses, that adds to GDP. When you're net importer, that declines from GDP. That's what U.S. is doing. If you're net exporter, it adds to GDP. We're just straightening that out. But there's one chart I need to show you what's happening. And now you need to see this one. This is Trump actually mentioned this. We have right now, and he mentioned 1.2 because the data wasn't revised. This is a 12-month U.S. trade imbalance. It's $1 trillion. That's the most ever. And I overlay that with gold versus GDP. It's guaranteed that this number is going to go up. The last time when Trump was in office, it was running about $500 billion, and it just went up it declined a little, like $100 billion. This is going to jump up this way. Number one, one way to make it jump up is recession. That's happened in 2008. Number two is tariffs. The key thing is what it means. It's very bullish for gold versus the S&P 500. But the key point about what's happening is the world has become very much predatory exporters to the U.S. It's a fact from the book. I mean, just look at the numbers. And we let it happen. And so whether like it or not, what does it mean for markets? So I view this is a great reset. That means very much global recession. Everybody kind of following the Japanese way, following deflation in China. I do love the narrative when China, Japan, and South Korea got together and try to help things out, to work with each other. And our chief economist, Anna Wong, said, yeah, that's kind of silly. They're a bunch of predatory exporters. Who are they going to export to? So just remember what's happening.
But Mike,
ripping the Band-Aid off.
All right, so jumping in here, because I think this is an important point, and I want to push back a little bit on it, is we're talking about predatory exporting, right? So yes. Essentially taking advantage of us. But number one, does this chart that you're showing show services, right? Because the U.S. has
goods
a
and
lot
services.
of services. So
U.S. trade balance of goods and services. This is a metric, goods and services. So
what you're saying, though, so just to take a hypothetical, maybe not a hypothetical, but in Vietnam, they can produce T-shirts for $3, let's say, or $1. Let's say $1 per T-shirt. And we buy them for $5. Just I'm talking like undershirt type stuff. you think that it's better to have someone gets paid $20 an hour here in the US make those t-shirts, and therefore then instead of me being able to spend the extra money on like food or lodging or something else, I should put that into a t-shirt when it costs me $20. Because essentially that's it. Like whoever makes, I've always known that for whoever can make the good cheaper, that means that I have more money. We all have more money to put towards, let's say, vacations.
That's the fallacy of free trade. It only works if you don't have the world's reserve currency and you're not the world's most demand pull economy and you don't provide the world security. There's not that self-correcting mechanism for the dollar. The dollar would have to cheapen an environment. It can't, it doesn't, it has. That's what's going to happen. The dollar's going to cheapen, which is good for gold and maybe somewhat Bitcoin. The point is t-shirts and shoes are not a big deal, but there's a lot of things. We used to have, I think it was in the 1990s, we had 56 blast furnaces in this country, just have 9 now. It's very, very risky from a U.S. security standpoint. We have to reverse that. We can't depend on making a wartime executive order with Canada. These are things that the point is, this has been happening for decades, and I'm just quoting stuff from Robert Lighthizer. We let it happen, and it's just been switched. Like it or not, the point is, what does it mean for markets? Is all the bottom line I care about, and it means that on average, now your average human being in this country who's been able to pump corporate exports by corporate profits by importing, offshoring things are now going to come back to the U.S. to do it, which means massive automation. We'll find ways to make t-shirts for a buck. We haven't had incentive to do that. Now we do. Maybe we don't care as much about t-shirts, but shipbuilding, steel, pharmaceuticals, things that we really need are all coming back. I mean, it's the things that Robert Lighthizer pointed about what Ireland was doing with pharmaceuticals and things were just robbery. Now, Trump pointed out this is just global mercantilism. I remember reading this about this in Hamilton, the book Hamilton from years ago. This is just the way it's always worked. Adam Smith pointed out forever, if you want to become wealthy, you export. And the U.S. did it too, but this is my point is, which is reversing some of the imbalances of history. The bottom line is this number here, $1 trillion, is going to go down and reverse, go back to hopefully get back to flat. That's just
my question.
What do you want to say?
Yeah, I just wanted to ask though, what's the timeline for those things to happen? Yeah, we'll find a way for sure. We'll find a way to make shirts for $1 here, but even with the regulatory environment, how long would it take to build those factories, to get approval to do those? Trump's going to be so long gone by the time we would catch up. And I wish we lived in a country where if a president said something 10 years later or 3 years later or 2 years later, you could count on it still being policy. But we both know that if regime changes, everything gets immediately reversed. Like these tariffs are gone if Democrats win.
So, but that's an if, and still right now that's not till the midterm. So he's got to get through the midterms. But that's a key point that I really, I've been listening to some of the stuff that Lutnick's saying lately. But number one thing I want to point about Lutnick is those of us who worked with him in treasuries markets, he's a shark. You got to be very careful. Just don't ever want to be in the wrong foxhole. You want to be in the same foxhole with him. But the key point I think he got wrong. He said like a month ago, said, yeah, we're still in the Biden economy, but by the time we get to the fourth quarter, we'll be in the Trump economy. He's mixing quarters with years. This does take years, but by the time we get to the midterms, I guarantee Trump will be able to point out billions and billions of dollars of reinvestment to open up the shuttered factories that I grew up with, being grown up in the Midwest, that are going to just come back. I mean, don't underestimate rapidly advancing technology to replace humans. And that's going to happen anyhow.
To be clear, I hope it comes back, and I'm not saying we give up on it. I see a comment Scott saying, oh, let's give up on domestic manufacturing. Not what I'm saying. I'm just saying that it's going to take time, which means there's going to be a lot of pain. So anyone who believes that can happen overnight and we'll see this economic boom, it just can't happen quickly.
Yeah, I second that, Scott. I think it would be great to have it happen. But like you said, the problem is, do these tariffs last even 4 years? And if they last 4 years, who's the next president? And do they stay in? And do you trust, like I was thinking about GM, it's like, okay, 25% tariffs on anything from Canada and Mexico. Okay, so they have to build out a factory. That takes like 3 years. Then they have to do all that. And by the time they've built and invested $1 billion in this factory, does that then get reversed? And they're like, oh, crap, we just wasted all this money. And again, who knows what happens? But I think that's a real risk here.
So here's a key point about it. And people say it's a risk. Do you remember one thing? Love him or hate him, but when Trump pointed out what was happening with Germany and them importing Russian gas, he was spot on. Remember when he instituted the problem with what was happening with China and instituted the tariffs back in 2017, 18? He gained complete unanimity in Congress. If there's anything they agree with, is pushing back on China. So this is going to tilt over a little bit. But when constituents start finding out that, by the way, the voters back home, which the Democrats completely missed, are happy that now we have demand pull coming. They can get better jobs. We can't get enough workers. Wonderful. We have to. This is what's going to make it universal, because I think he tweaked something that I point out. Decades ago, from the Midwest, we used to complain about, like, why are we letting China, and remember, the key thing I remember was we couldn't, all these German cars were in the US, and US tried to export cars to Germany and charge 10%. Yet, it was just from traders who were buying Beamers because they were cheap. That's the key thing now. It's leveling the global playing field. And what they've said is things I've heard internally. It's like, kind of shocked it took America this long.
Yeah. By the way, up on the screen, I was just had up the S&P making new lows of the day here. Yeah. So again, we are making new lows on the S&P and the NASDAQ late in the day, and that's this is going to be one of the biggest down days in the stock market, with about 39 minutes remaining, that we have seen in a really long time. VIX, I think, just to check in on the VIX here. I think this is always good to look at. The VIX today is 27. Trading up about 30%, or just shy of 30, which, by the way, that's not at extreme levels yet. So if people think, oh my God, this is the worst scenario, just remember last August, the VIX went up to 65. So yes, it's high. Once you get towards 30, it's kind of in the upper range. Mike, I know you've watched the VIX, and I think Scott as well. But really, we're just back to these previous highs. The question is, does that break out, and what does that tell us about the stock market?
So let me rope in one key thing there. The number one force for lower rates, the Fed to ease, and deflation is the U.S. stock market going down. The wealth effect, the market cap to GDP of the stock market is the highest in a century. That's just a fact. Like right now, stock market cap to GDP this year is down about, stock market wealth is down about $6 trillion. That's half of what it was up last year, almost about $6 trillion. Talk about a massive wealth effect that's going in reverse. That's what happened in the 1930s. And that's what we're doing. That's what happened in Japan in the remember, I used to work there. That's what's happened in China in the last 10 years. It's happening here.
You had basically a lost decade in the 30s, right? I mean, I think Smoot-Hawley was in the 30s, right? And basically it was like World War II is what got us out of that recession, I believe.
It did. The key thing I want to emphasize is we talked about in this program, and certainly in Macro Money, is what the big mistake was happening is, first, the Fed stayed low for too long. And then last year, they added alcohol to the punch bowl of rapidly advancing risk assets when they started easing. Remember, we talked about this? This is a mistake. It was, S&P was jumping up around 5,000, and they eased a lot. Potentially, some people say to help Kamala Harris get elected, didn't work. But what that did is it jumped up another 1,000 points S&P 500. The risk is when you take that back down, that's an island top pattern, which we have in Bitcoin versus gold. And that's when you reverse the wealth effect, and it trickles down from there. And right now, we have cut off the austerity. We're cutting off the fiscal, and the Fed's out of the picture until they see deflationary forces. And we might see some of that tomorrow. But that's my point, is this is just so overdue for some normal correction. And the point is, you get so extended in history, it's human nature. People forget that, yes, I can't just get free money by buying Bitcoin in the stock market. It's time to lose some, unfortunately.
So I think that's the question, Scott, right? And you talk to tons and tons of crypto people out there. Are they willing? And I think this is the thing for the whole entire country. Are we willing to go through the pain of this reset? Because that's essentially what's, you cut off all the spending in the government, you cut the Fed off, you do all this. There's going to be years of hardship. And the question is, do you think the politicians even have the stomach for it?
I don't know. I think they'll just print money because they have to win the midterms. I mean, we've talked about this quite a bit, but I think they can do short-term pain. But if we're talking about this in a year, it's going to be a big problem for Trump and the administration, and certainly the Congress and the Senate if they want to keep control. So no, I don't think anyone has the stomach for the long-term pain. And I think that the screams will start to get louder if markets continue to drop. And I think they're just going to flood the market with liquidity. The game always ends in printing money.
Unfortunately, I
Always.
agree with you. And I'm the same way. Like, I mean, it's like, what do they say? A leopard or cheetah doesn't change its stripes or whatever. But the
And
point
by the
being is
way,
that,
yeah, I'm
yeah,
sorry, I didn't mean to interrupt. But by the
no,
way, he didn't run on austerity. He definitely ran on fixing things, but austerity is not politically popular. And when people start to feel like that's what it is, they're going to turn very quickly. I
right.
think.
And you're having the reverse. I mean, what's I think interesting too is that a year ago we heard from McDonald's that people making 50K or under couldn't afford to eat at McDonald's. The Dollar Tree, Dollar Generals, we're seeing actually people not being able to afford in the lower income brackets, those places even. And now it's finally, because the stock market's not making new all-time highs every week, we're starting to see that consumer spending. Like Lululemon last week, I think it was them that reported earnings and the stock got crushed because now they're warning that consumers are no longer spending. So it's trickling up. And again, the question is, when does the stomach, how much can they stomach in the political side of things?
Well, I
So,
think that, Mike, you probably have it on the terminal, but now isn't June priced in for a cut instead of July already as of yesterday?
You can pop it up right now. June's at 93% or so.
Okay.
No, sorry, 68%.
But what was that yesterday or 2 days ago?
It
Much
was
lower.
lower. Yeah, it was much lower. But so that's the key thing is we all know tariffs are inflationary, but it's a stock market going down is the number one force. And that's what the thing from the future, the Fed's going to start acknowledging is when you get this much of GDP, it's all stock market is the economy now. And why is this kicking up? Okay, the tariffs are inflation. We know that because the stock market went down, and we all know that that's for consumer spending. So the key thing I want to point out, remember, when you talk about the things you're talking about, all the fiscal month or the spending might come in, is we haven't even started this process. The rollover in yields has just started. The rollover in volatility has just started. The Bloomberg Galaxy crypto index just started going down. Usually these things go way down, and you get, this is just getting started. And again, this is, you have to go back 100 years of how expensive we were in the stock market, and cryptos are just the led everything. That's why I look over, I keep pointing out things like Dogecoin and Shiba Inu. Once you knock those down to like zero, yeah, we might have a bottom. This stuff is 1929, 1999, 2007-ish as far as speculative excess that need to be purged.
So Scott, just flipping back to crypto, I want to ask you one question. It's so we know altcoins are just getting punished, Ethereum, you name it. I mean, it's nasty. Do you dollar cost average, or you just stay the heck away at this point because you don't know what's going to be here in 5 years or something?
I think it's reasonable to dollar cost average into Ethereum, Solana, some of the bigger names. But once you get beyond a few that have had a bit of hype or a fundamental use case, I'd say you stay away for now, right? I mean, listen, you'd rather buy higher when you feel like there's a bull market starting than to just catch every knife to zero.
Yeah.
I dollar cost average into Bitcoin here 100%, just to be clear.
Yeah, no, I agree. I mean, Bitcoin, I think, is the clear winner in the crypto space, and it's just a matter of.
I would also dollar cost average into SPY here because I've always dollar cost average into SPY or into the market. Even if it's going way down, I'll be buying that.
That was going to be my next question is that, are you guys looking actively at this point in picking up some of these beaten down names? Like, I mean, S&P is obvious, but what about Apple? Apple's down like 10% today. That's a $3 trillion stock dropping 10%. In fact, I heard $2 trillion in market cap wiped out today.
That's
so. What's the lessons of Jeff Booth and rapidly advancing technology? The Mag 7 is due to go the way of Nifty 50. We're way overdue to get crushed in terms of other sources of companies coming up with better suppliers. And to me, I'm making a lifetime call here. To me, this is not a place to dollar cost average into anything except maybe gold or T-bonds, because we're at the point where the market's so stretched. The wealth effect from stocks in this country are the highest ever as far as normal income. I heard it recently with people in Florida, all the retirees were watching CNBC, where retirees shouldn't be overweight equities, but they are because they couldn't help it. This is just how, I'm looking for singles.
Yeah.
And I'm looking for singles. So otherwise, that's why I'm kind of looking at cryptos. Like, I think the next key thing we can look in cryptos, great indicators, is for Tether to flip in and get a higher market cap than Ethereum. Ethereum's that's maybe around 1,200. That's the next support.
Well, that could also happen by Tether just continuing to add market cap, which is happening. I mean, they're 140, 150. They were at 100 not that long ago. So
that's part of what's happening in the space. I think people are missing. Now, this is a tremendous technology. We're finding a tokenization of real assets like the dollar and treasuries, and even other assets like commodities and equities are wonderful. And you'll probably be able to buy those and trade those via token in the future. But things like XRP and virtually all the other hundreds and millions of cryptos, I have major competitors. So I like to say there's gold and silver, platinum, palladium. Gold has 3 dependents. Bitcoin was 1 in 2009, and now it has millions of dependents. They go down, it pulls the whole space lower, and they're all going down. So I'd say this is, who panics first, panics best.
Wow. Intense market Mavs today,
end.
gentlemen. I mean, there's just so much to discuss. Hopefully we'll get back together next Thursday for another round of this. But I want to thank you, gentlemen, for joining and throwing. I love the little banner, man. Like, we have a little thing going on today. So that's wonderful. Socials are at the bottom. Please follow everyone. We have tons of people watching. And hopefully we'll see you all next Thursday for Market Mavericks again. You guys take care. Thank you, gentlemen. Take care.